Hello, everyone. Coming back with another video, and I got something to talk about, so that's exciting. Well, I've been every day looking for more and more ideas to potentially allocate to, but I gotta say, the amount of quality signals since the end of last year has slowly been fading away. Now, that could be a good thing by ensuring that it keeps me out of the market and I'm not over allocating when I should be pulling back, especially if like these yields really start breaking out. That's just going to hurt tech. That's just how it works. And especially around all the AI trade and stuff like that, right? We see all the big names, all the hyperscalers, the Mag 7, they're allocating all of their free cash flow to this AI build out in the face of rising inflation, all time low in consumer sentiment, and breaking out of long duration yields. So it's all coming to some pinnacle at some point here, especially with the Iran war and oil getting some type of spike. Who knows if it's going to go up or down, but that's what we're seeing. Now, so that's good, right? So if the signals are telling us there's not really high quality, maybe that's helping us stay out of the market. But if the other side of the market, which is like the 400 other equities in the S&P 500, well, technically it's probably the other 500, but if they start to rally and the market broadens out, then you could probably see higher highs in the stock market, right? And who knows? We'll have to see. Now, in the second part of that equation of the market broadening out, I would expect to see more and more high quality signals start to show up on the site. And what I mean by that is traditionally, when you're at the bottom of either a delta or some gamma pin, delta is probably the most easiest to explain, is that if you look at something, maybe Toast, I think. I'm trying to remember some names. Yeah, so here. So we have this long-term spread at the end of the year, right? And that's what I'm kind of targeting. But you can see that it's all stuck in put delta. It's all red, right? And all of this put delta, here, let me go. There we go. So all of this put delta traditionally is just the dealer just going to keep pushing the price slowly down, and it's just going to fade and fade and fade and fade and fade, and that's what it does. It just keeps fading and fading and fading. You get a little bit of a rally, and then it fades and fades and fades, a little bit of a rally, fade, and it just fades and fades, and that's what it does, and it continues to do that. But when you get really big turnarounds, all of that becomes fuel for really explosive moves to the upside. But when that happens and when it doesn't is very hard to identify. It's not easy. Now, I'll give you an example. I think Reddit did this back here. Let's see if we can go back here and kind of identify what I'm talking about. So maybe around 25. This was Liberation Day, right? This is the tariff day. So for something like this, 25 419. Is that not a day? Let's see. April 25. It's not a day. That's a Saturday. That's why. So if you look at a lot of this delta, it's not very good. Let me go back to my relative so it's easier. There we go. So here's the spread that you would typically identify, right? But if you come up here, it's very mixed and it's not very clear. Let me see if I can go a few more days. Well, it's starting to show signs there of the breakout. Hold on. Maybe that was the bad example. Maybe that. Let's see if I can get an example. Okay, that was the bad example. All right, well, okay. Let me see. Okay. Hold on. Maybe I went too far forward. Okay, so you're in a lot of put delta here. All this put delta down here, way out here, there's long duration put delta. And what I'm trying to say is that on the rotation, when you step forward, then you get all the signals for the call delta. Then see, no, it's all blue now, right? So it becomes fuel for rallies. And if it holds, these longer term spreads, especially if the distribution of open interest is very strong across every strike and every expiration, like Reddit is, as opposed to a trade I'm in that is terrible, but we'll talk about that. But if I go forward here, maybe 3-6 months or whatever, you could see that it rallied through the spread. You see that? And this is like the move we're trying to find. But when you're down here in all of that put delta, you don't know if you're just going to keep fading and fading and fading, or eventually when volatility peaks and starts collapsing, then you get that feel from the put side of the equation. So it's very hard to see signals when you're in that put delta area and you don't know if the market's going to normalize or not. Okay, so as opposed to, let me not lose my train of thought, if I go to like SPSC, where initially there was this spread, but the spread is kind of gone now. Well, it's this gamma spread, this 55-680 spread, right? That's what I was trading. But there's really just nothing here in terms of like even volume. Look at the only thing that traded was this 55, and one person bought one call. You see that? One. So definitely avoid names that just don't have a lot of activity, because we're trying to find gamma squeezes where dealers have to actually buy stuff. It doesn't say this. I'm not saying that this can't go up. I'm just saying like it's more likely to have really strong distribution between something like sell, where if I look at this is the volume. Look at the amount of activity across all expirations and all strikes, as opposed to like SPSC, right? And then if I go to like these gamma or delta spreads, you can clearly see they're sitting here, right? So that's what I'm talking about. And you could see that it's just really strong put delta. And if the market starts rotating down and this name is not a part of some short basket that everyone's a part of some spread, then you'll just get fading and fading and fading, and you'll probably come down to this $25. But it's all going to be red, especially in like delta. Gamma seems to be a little. So you get all of this red here, all this put delta, and all of these strong calls that are up here are also being faded. And so that's fuel for the fire. So it's really hard to identify the turning point in a lot of these things, because you're just sitting in put delta, and it's just going to fade and fade and fade and fade and just keep fading and fading and fading. So you're not really going to know the exact bottom, but you can only time it when you really see, okay, maybe it's going to be this 25, because there's just really strong put support there. And I'll get into VIX, and maybe that'll start explaining things. But if we come down to this 25 and VIX is at above 25, around 35, then it's probably safe to place this trade on towards the end of the year, this spread trade, a call spread. Now, if I go back to my point about not seeing quality signals, well, it kind of aligns with a lot of things. If you look at current VIX and you look at gamma, you could see that there's this 18-25 June spread, and price has so far been consolidating around this 18 put side of the equation. And if you go in here, there's also this, well, there's this 17, there's this 18, and this 18. It's hard to see because it's not as strong because I'm on relative view, but there you go. And let me go back here. So what I'm expecting is that if VIX has upward pressure here, then that's probably going to be driven by these longer term breakouts in yields here. So if you go to, this is the 30-year. So the 30-year is starting to break out a bit here, right? And everyone was expecting that rates would start coming down, especially with the new Fed Chair of Warsh. And so if these longer term yields start really breaking out, that can really spook a lot of people, because at some point, especially the 10-year, if the 10-year starts approaching anywhere around 7 to 8%, which is a really big move. I mean, you're going to have something kick off to do that, but that's a really big move, right? If that happens, then there's really no reason to be in equities, because the average return on equities is 8%, and I don't even think that's inflation adjusted. So, but you're going to get a 14 to an 18% vol in the indices, but bonds, these bonds are risk free. You're always going to get your payment twice a year, and that is when you really start seeing some fireworks, especially with all these hyperscalers burning all their free cash flow. They stopped buybacks. Consumer sentiment is at an all-time low. You're now getting inflation pressure from oil. So, and like the yield curve is starting to put upward pressure again. And anytime you had these big upward movements in the yield curve, you've always had catastrophes. So this was the dot-com. This was the financial crisis. You can go back in time and find other things. This was the commercial bank blow up, right? So if this really starts breaking above 1%, one and a quarter, that's when unemployment rate really starts getting impacted as well, because there's correlation there. So I think the site's working as intended as far as if you can understand and read it correctly. And it's telling you to not really go crazy about allocations, maybe play a few trades, right? But so my portfolio now has been going up 0.3%, down 0.3%, or not 0.3%, up 3%, down 3%, and now I'm flat on the current positions held. But I did short the long duration yields, the 30-year, and I made $600 in June, which is incredibly tiny. And I rolled that out till September, and that's up $1,500, which is still tiny. I have a really small percentage allocated right now. I just can't find any fat pitches. So something I could sink my teeth into, like if I look at Reddit, right? I want to buy Reddit like down here for this long-term spread that's been sitting there since 2025. You see the strong signal there? And it's just been up and down, up and down. It's been trading within this channel. And so like Reddit would be a strong signal, but I want it down here, right? That's the highest quality trade. There's other ones. There's like Wix, which has this spread here, this longer term spread right here. But I'm just waiting and being patient and patient and patient. I'm just looking at VIX and thinking like, well, if VIX starts to push higher, that may drive things like Wix lower, right? But who knows? We have to see what the price action looks like when that happens, right? If Wix starts to rally when VIX rallies, well, that means that the calls are in demand. So someone's short, right? It looks like it, right? Someone's short this thing, or a lot of people are short these things. Software has been getting wrecked, so that makes sense. But there's a lot of these long-term spreads that are showing up in certain names. Cell is one of them, right? This is beverages. It's kind of defensive. And so there's a spread there. Trip is now showing up. Like there's this spread, but it looks kind of thin relative to a lot of the other names. And that thinness, I've been burnt too many times on it. It works, but I've been burnt too much on the thinness side of the equation. Like SPSC, that's incredibly thin, and it just kind of, it either works or it doesn't. It's like you don't get any in between, right? You don't even get a chance. And so anyway, so EMR led portfolio returns. So I bought it down here on a spread that was back there. It rallied all the way up. Then I shorted on a rally to collect credits. I collected the credit, and then it rotated back down to the pin. And so I'm down $300 on this trade. That's including the credit I collected. So I'm down $1,800 now, but if you include the credit I made in May, then I'm down $300 because that was a $1,500 credit. Okay, so then NTNX started a rally. And now that's compensating for portfolio returns. Now that one's kind of interesting. This is a lot of call delta, and I put in a hedge. So I put in another hedge here, right here. So I sold 6 for $2.29 in June to hedge earnings. Now, if this pops really nicely, then I'll probably just close it for a nice profit. And if it falls back down to the 40 pin, then I'm going to collect this 6 times 2.29 times 100 credit. It's like, what, $2,400 or something? Then I'll collect the credit. But this is out till October, so there's plenty of time. So everything's been ping-ponging around, and I really haven't made much money yet, right? There's just nothing showing up. And SBSC has done jack shit. Nothing has happened so far. Kind of a nice little rally there, back up into the call thing, but this needs to break this downward fading. It just needs to break this and give me some type of rally. It's out till July, so maybe we could get something there. Who knows? We'll see. But pretty much flat, right? Okay, so the big deal here is the breakout in the yields. And if this starts moving aggressively, if these breakouts, even the 2-year yield you could see has been starting to move. One good metric is you could put the Fed funds on here because it tends to trail the 2-year. There we go. Oh, why is it? Oops. Hold on. Regular. There we go. So now they're the same. They're the same rate, or the same denomination. So you can see historically, the Fed funds rate just trails the 2-year. So the 2-year sells off, they cut. 2-year rallies, they raise rates. 2-year falls, they cut. Blah 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 blah. Right, and it's about 6 months or something like that, somewhere around there. So the Fed has no reason to cut interest rates right now. Right, we're starting to see a rally. Now it's not 25 basis points above the current Fed funds rate. So they're probably just going to pause, right? They're not going to chase this. They're going to wait. And if people realize that inflation's coming back, if you go, oops, there it was. If I go back, inflation rate is breaking out, 3.8%. That's highest since May 2023. That's 3-year high. That's a 3-year high in inflation. So people thought we were going to destroy inflation and come back around below 2 and we're going to get low inflation. Well, it's going back up now. Now, that's probably temporary for the Iranian war. We'll have to see what happens, but it's not a good sign. And that's why yields are starting to price in some type of inflation. And so what I'm trying to say is, like, if the fiscal situation gets out of control, the signals on the site are telling you there's not really a lot of opportunity, or rather, there's not a lot of really big, obvious, fat pitches where you can have a good risk reward and just kill it, right? It's all these like average trades, and average trades are kind of like coin flippy, and do you really have an edge, right? Like, they're kind of boring, right? You're not really confident in things. Now, August is generally the time you see markets do a little barfing. And if you look at August, July, and August, you can see these strong call pins here, 35. And that would be kind of a target if you would expect that we're going to get that type of sell-off in the market or higher interest rates or whatever the case may be. And so you can anticipate that if volatility pushes up again, this is acting like the 2022 situation. It's acting like, the 2022 situation, where you get a move in VIX, a pullback, a move in VIX, a pullback, a move in VIX, and then you rally, right? So whatever was in here got resolved. Now, if you look at the market in 2022, that was this move here, right? And that was the pullback in all the tech names in 22, where they got murdered, right? So, and look, you can even look at Meta in that type of movement, right? So interest rates destroy tech. And if interest rates are going to rise, you probably need to be really careful allocating to these names that have just exploded, right? Because their estimates may be way overblown. And you can see how it actually hurts earnings here in 22. And that volatility profile is that unwind of those trades. So the VIX is kind of signaling something like that. Maybe it's not as strong, but it's definitely signaling some downward pressure. And what you really want to do is you want to start allocating when VIX is 35 or above, or maybe 25 and above, depending on what scenarios we're in the market during that time in June. And so if you go back in the market, it's usually the end of year into March rotation, end of year into March rotation. See? End of year into March rotation, end of year into March rotation. And then if anything else comes to that, it's during the July, August here. So you can see, like, here's the March, April, and then there's the August. And if you go back here, here's the July, August. That's where it started in August, right? It's not always the case. And look here, this is your March. There's your March. And here, this was right after August into September. Here's your March. You see that? So around the end of year to March and towards the August, September, you start getting some fireworks. And it doesn't say it's always going to happen, but you just something you got to be aware of. Also, the issuance of long-dated yields from the Treasury happen in August. And that's probably going to freak a lot of people out if you see yields breaking out, but people are demanding higher interest rates from the fiscal situation, from the inflation situation. That could be a problem. So I haven't allocated anything. I'm kind of waiting and just waiting for something to be really obvious. And it's going to be obvious because everyone is going to be screaming death, basically, right? They're going to say the world's over or something's going wrong, and that's usually when you allocate. Now, I do have FIG on the radar. It hasn't shown any good signal so far, but there are some interesting setups long-term in 2028 for this, and they're good risk rewards and they're good compound annual growth rates, so that's fine, but it would be going against how I'm trading the signals on the site. But I do see this $15, $100 spread for the end of 28. When I first looked at it, it was $4.67 or something around $4 back here in April. And then we've obviously rallied pretty strongly off of that $17 into $25. And now it's $7.70 or something. So it's moved pretty nicely. But I'm really waiting for this $17.50 to come back, or even the $15 would be really great. I don't know if we're going to get it, but maybe if the interest rates really kick off and VIX kicks off, maybe this can drive it lower down here into in the depths of hell, and then I can place those longer term trades and see like a 1,400% risk return profile on that. And then I'll place one of those types of trades because I really like Figma's numbers, and I think the whole AI narrative of seat-based pricing is a really stupid narrative. It's just not playing out in the market. Okay, so that's all I really got. All I'm doing is just running my screeners every day and taking an assessment of what type of spreads are appearing in what types of industry. That's like one thing I'm noticing. Then I'm also trying to notice what types of trades are correlating in those industries. So if all the energy names have what look like lower down put spreads, that can tell you maybe a lot of expectations about the Iran war. If you're looking at software stocks and you see a lot of call type spreads showing up, well, maybe that could tell you there could be a rotation coming. And so I'm just keeping an eye on all of these spreads and seeing if the spreads hold, because that's very important to see if these long-term spreads stay. So Reddit, this spread here has been there since the end of 2024. And having those spreads stay, you could see drives a really strong profile of you buy down here, you get rid of it up here. You buy down here, you get rid of it up here, right? Really strong levels. So I'm just keeping an eye on all of these spreads and kind of noting ones that look tradable and just tracking them. And what I'm also trying to do is I'm trying to avoid really thin trading on spreads, like equities that just don't have a lot of open interest, and kind of avoiding them. Like, look, there's like really nothing there, so kind of just avoid those names and try to find ones that have a lot of distribution across many expirations, many strikes, and watching these spreads to see if they continually maintain day after day after day after day. And then I'm going to time these trades. I put them on the watch list and wait for VIX to show itself above the 25 or even targeting the 35 for July, August. And by the time you get to July or August, these become 6-month trades, right? So they're no longer this long duration 241-day trade. They're going to be cut in half. They're going to be 120-day trades, which are completely fine. So that's what I'm waiting for, just being patient. Now on the website, I did make a bunch of changes to the watch list. You now have named watch lists. So what I can do here is, like, if I click this, you could see like this cell is on this watch list, but I can create a new watch list. I can call it like, oh, Delta spreads or something, right? And now I get a new watch list. Now it's on Delta spreads, see? And then I can go to another name and be like, oh, Wix, and then click this and put it on Delta spreads. And now it's over there. And then I could rotate to the watch list. I could rename the watch list, right, if I wanted to. I can delete the watch list, and I could take it off of watch list like this. So now there's named watch lists. And what else is coming is alerts. So I can set an alert of like, oh, I want to know if the 55 strike is breached in price or whatever. There's going to be alerts on the website. And so then you'll have like a tab for alerts. So you'll have many different tabs here, like Trading View. And so things are improving over time. And so these are a lot of feature requests that I've been implementing. And so there's a lot of like tab works in incremental order now. So you can just tab through things. Escape puts you back into the box. And I'm not sure what else I did here. There was some fixes to the sorting. Some of the skew stuff didn't actually work, and I fixed that. So skew sorting works. And nothing else I can think of, but I'm working on the alert situation. So that's all I have to say. The signals have been dropping in quality since the end of last year, which was kind of interesting because that's when the market peaked and rolled over, and then everyone got squeezed on the fake Iran news. And now oil's popping, and it's correlating with yields breaking out and low VIX, and it's all kind of culminating into a pressure point of some sort. And the only way I'm playing this to the downside is I'm just shorting this ZB. It's a futures market for long duration yields. So I'm shorting this. I want it to break out and go down, right? And that's the only way I'm playing it, but I am still sitting in these longs. My plan here on SBSC, if I could just get my money back, I'd be fine. So if this rallies and I could somehow get out because there's no liquidity in this name, but if I can get out with a 20% loss or break even, I'm just going to do that. Usually when you buy a trade, you want it to start working, right? You want to see like week after week after week of buying. That's what you want to see. And SBSC is not doing that. EMR did that right away. It's really rallied. I sold some credits and then it just rolled over. Classic. Can't really do much there. But if this rallies into the 150, 155, I'm going to sell it. That's where the call pin is. So this rotated lower after things rotated. But we'll see if this put gamma holds and we get another rally. That's what I'm looking for. But other than that, I don't have any opinions on the Iran war or anything. I'm just looking at prices. I'm looking at correlation with the VIX, and I'm just trading that. And I'm not trying to hold like economic opinions or things like this. But anyway, that's my update. And stay a little careful out there. Don't go a little bit crazy. There's a lot of like interesting underlying issues starting to show up, and it doesn't look like you should be a hero right now, at least in my view. So thank you.